What's going on, everybody? Hope you're all having a fantastic day. Boy, am I excited for today's stream. I'm on with an old cycle. Let's see, what's would have this would have been cycle 2 legend, Donovan Jolly, and the good man, crispy man from hexfire.io, master architect of the data warehouse. We were just sorry we're a little bit late here getting going. We were going through how we were going to present the future of DeFi to the world, and because this is a big mission, right? We got Richard Hart hiring some of the best lawyers on earth to win back DeFi and stop overregulation here in the States, and it's going to be a pretty big movement. I'm excited to be a part of it, and I'm excited to take a look into these price charts first. We'll go over some cycle theory. I know Donovan had made a chart and posted to Twitter today. His video today was on the potential super cycle that's building up. So we're going to have him come on and share his screen and give us an example of kind of how he's seeing that playing out going forward. I know I got excited looking at that. And I have my own beliefs about where I think a lot of that money is going to flow this cycle as more and more people are comfortable custodying their own funds and they start to capitulate from centralized cryptocurrencies where the volatility will be squeezed out of them, and the opportunity for the everyday person is going to be more in DeFi, and then they'll head toward the last bastion, which will be these really illiquid DeFi markets, which will end up becoming the future of finance. That's my belief. And what a better setup than institutional money flowing in through Bitcoin and Ethereum, and then just easily being able to convert that into DeFi through tools like Uniswap and PulseX and some of these other ones on the other chains. So we'll start off with some price charts, some price analysis, some cycle theory, and then we'll get into indicators like the golden ratio multiplier and the Mayer multiple pioneered by Trace Mayer back in the early days of Bitcoin, measures like the price relative to the 200-day moving average. And then as we get further into the stream, we're going to dive deep on why we think HEX is the Bitcoin of DeFi. And we're going to go deep on daily payouts, how those are measured and calculated, what the T-share is, how it comes into creation, and then different trends we're seeing in terms of the longevity of the space. So without further ado, I'm excited to bring on Donovan Jolly from DIY Investing and Crispy Man from hexfire.io. How you doing, gentlemen?
Thank you so much for having me. That was quite the legendary intro, if I do say so myself.
Hey now, their Axis.
So
hell of an intro. Save the world.
Let's not waste any time, guys. I want to hear more about the super cycle theory. I think I've been thinking the same way in terms of where crypto is going to head. There is some question marks for some folks in the market, whether we see, Bitcoin rally from here off the ETF news, on how any potential short-term downside here in the middle of the cycle might affect altcoins. So I'm excited to kind of hear your perspective on that.
I'll tell you what I was looking at. I was listening to this guy, Donovan Jolly. I don't know if you guys can hear me. Yeah, it was. I watched your stream a little bit earlier, Donovan. Anyways, but that was the first news I had gotten. They had done they had kicked off the ETF and trading had begun. And up until that point, right, I didn't know what to expect because by the rumors, sell the news. Could have been some major action. I guess you could consider some of this to be pretty major, billions being thrown back and forth. But it looked to me that Bitcoin went right up to test, a few averages and came back down a little bit, and so now it's just chilling. I see what's going on, and of course I'm interested in Bitcoin because I think that projects what might happen to the rest of crypto.
Right.
Yeah. So I don't know if you want to. Do you want to share your screen, or do you want me to kind of run the chart while you kind of just talk over it, Donovan, or kind of where your thoughts are on?
Yeah, I mean, I can run off you, and then as we go, I can kind of share charts too. But more or less, like the whole consolidation that we've been seeing up to this point, like ever since we broke 25K, I was pretty much watching for 48,500. That was where I told everybody to take profits. That's where I kind of expected we'd start selling off, and we pretty much perfectly wicked that with this. But when I'm looking at it, I honestly don't think it's over. I think it's going to go up higher. So I don't think that this rally is over. Like the whole consolidation we've had, it's been pretty consistent the whole way up. It hasn't been very many pullbacks. It's been more like just trending rather than any sort of big impulses and breakouts. So I kind of think that that's what's going to be coming next, though, is a bigger breakout, maybe like a short-term blow off top before we do enter a deeper sort of consolidation and correction, maybe 20-30% or something like that.
Yeah, that's pretty good. Let's see, where does 20% put us? 56,000. Yeah, that number makes sense to me. Going, let's see, where does that put us back in time? Go to like a daily here. I just remember that level being significant. Here's 52. Here's 56. Right here. Yeah, that would run right into that level, which is kind of where the market kind of topped out for all intents and purposes. That was that first
crazy
tap.
How quick we've honestly been taken off to begin this cycle in comparison, because like it's crazy we're already sitting back at those all-time highs just about.
Yeah, and isn't it crazy how most people were pretty bearish? I mean, I shouldn't say most. It's kind of, you never know when it really didn't flip bullish until we got back past that point there. Mm-hmm. I remember people being like still in like this kind of a mindset even in this period here.
Right.
And I think you tell me how you felt. For me, when I saw the Bitcoin react like this during the banking crisis, that solidified for me that the market actors had changed their opinion on Bitcoin, and this is where I think Bitcoin was legitimized, was in this very moment.
Right. Honestly, yeah, like the amount of adoption we've had just in this, year so far to begin this cycle, it's been like way more than anything I've ever seen, because this is my 8th year in crypto. So I got in early 2016. At the time, like there was nothing but speculation around Bitcoin. Nobody used it. It was like a drug vending market. That's it. It's only people that used it. So getting into like our last cycle, we started getting a lot more different adoption, PayPal, different like Robinhood. We had different ways for people to participate, but it still wasn't even anything like we would expect for institutional investment from a mass scale. And then for the ETF, and to have some of the stuff that happened earlier at the beginning of the cycle being like end of the year 2022, beginning 2023, to me, it's like, I don't know what more needs to really happen to cement crypto. Because for me, it was the ETF. I was like, well, what else really needs to happen if we're talking long-term adoption? And so to see that happening already, I want to see us have a correction in here soon, to be completely honest, because I don't want to see us like front running this cycle. That was what my video was today, was like, I don't think it's actually a good thing if we start breaking out and going into a new all-time high so fast, considering we would be doing it like 30% quicker than the prior cycle. So I think that if we did that, it would end up being more of like a blow off top scenario. And that could take us for like a multi-year type of correction that's more so not just a year-long bear market like our prior ones have been, but like multi-year process to work through. So
yeah. Well, while performance has been pretty strong, right? I don't think, just looking at what I'm seeing with the numbers and stuff, I don't think we've seen so much demand yet that I would even conceive a blow off top yet.
Right.
But that could happen tomorrow, right? I mean, we could go on some sort of crazy run. But just looking at some of the things that we look at, like the indicators we'll get into, right? I mean, yes, very, very good performance. Awesome performance.
Do you guys see a potential for some form of like a double bubble, or some period of like a sideways period during this market cycle where we do maybe go up from here, maybe tap that 56 level, and then come back down for a mid-cycle lull, and then a secondary peak, like this sort of shape, but not so up, more like this, and then we kind of retrace like a period, and then we build structure mid-cycle into something bigger, going into like late 25, maybe even into the 2026 territory?
I think that we're going to top the end of the year 2025 based off of like the 4-year cycles, and that's been my plan for a long time, and so I've kind of stuck with that. But I do think that in the short term, I'd like to see that exact correction that you pretty much drew, like come back down to the trend line that we've kind of been building ourselves on, basing to begin this new cycle, a little bit more similar to what we saw in prior cycles. And then once we kind of come back down, I find like the confluence between the trend line as well as the prior high of that consolidation, which it will be a little bit different on a log scale versus linear, but regardless of the two, that's kind of what I'm anticipating, is some type of correction, come back down to this trend line, that from there we'll be able to consolidate. And I'm not really anticipating much until like Q3, Q4 this year before things really start to get outside of prior all-time highs. That's the most ideal scenario for me. That would give us a whole nother year to profit off of whatever altcoins are going to launch on new ecosystems, whatever new adoption is going to be taking place in the meantime. And then, you know, leading into 2025 being more of that blow off top scenario, which in my opinion would be the most ideal thing to play out, but we just have to kind of watch and see. We're at that point where like we need to see a correction if we're going to, and it's looking like it's just super bullish, but you know, obviously that's what happens before we do see those big corrections. So we'll just have to watch.
Yeah, I'm curious, you know, this is kind of getting into the weeds a little bit, but you know, I look at the past cycles and I think to myself, well, the way that Bitcoin made its first few years here on the log chart, like this is not what we saw in this cycle. This was more like that ABC correction coming off that high, and then having that double top and then that double bottom is like just completely different price structure than what we're used to with that like blow off tops from the previous cycles. And so I'm wondering if we're not seeing a sort of, and this is speculation, if we're not seeing like a change of the price patterns we're going to see going forward. And then it would really throw into question a lot of, you know, is it going to be so clean that we can expect that? And I don't mean to scare you from out of your strategy, just that, like, do you think that there's potential for this to play out unlike how anyone expects it to play out?
Yeah, that was like also part of my video today, was talking about like inside of a 4-year cycle, depending on where the cycle top is, you measure a cycle from peak low to peak low. If you want, I could share my screen now.
Yeah, please do.
Yeah. All right, let's do this if I can figure it out.
Yeah, the other thing too is even though we're talking about like 4-year cycle, and I talk about cycles all the time, what will happen is we'll see more evidence come in, and as the market reacts, right, that may be changed. Right? You change your view based on that.
Alrighty, if we come out here and we look at these cycles, this will more or less be able to explain what I would think. This covers the scenario, whereas if we have like a normal one, what it would look like, and this covers the scenario of what happens if we saw like a shortened cycle that's a little bit different. So basically the way you measure a cycle is you measure peak low to peak low. And in crypto, or Bitcoin specifically, each peak low to peak low should equal 4 years. So 4 years equals 1,450 days. Both of these cycles have only been off by a month, but they were the exact same amount of time. Peak low from 2015, peak low to 2018 was 4 years in between. And then analyzing peak low from 2018 to the most recent low that we saw during the FTX collapse, that was also exactly 1,428 days. So we saw exactly the same sort of setup playing out. Now, this is where things are important for understanding, like, are we going to have a normal 4-year cycle, or are we going to have like a shortened one? You would basically be analyzing the middle point of the entire cycle. So from peak low to peak low, we're going to go half, which is going to be 714 days. So 714 right there. We're going to draw another line. We'll make it yellow. And this is going to give us our middle range. So if you notice where the cycle top was, it was on the right side of the mid range between the cycle, well, between the entirety of the cycle. So basically what that means is this is a right translation inside of a 4-year cycle. A right translation basically just means that the most likely scenario to happen from here would be the same trend that we've been on. So if we've been on a 4-year cycle trend, the most likely scenario is we do another 4-year cycle. So if we come and apply the same rule over here to this most recent cycle, and we come like 714 days, we'll draw another line. This will give us our next one. We can see that depending on where you call the top, because I know Richard called it at 65K, even though we went to 69 after, it doesn't really matter. Depending on where you draw the top, both of these happened on the right side of the mid-range. So that means it was a right translation in a 4-year cycle. So when we're factoring in all of this, because our last cycle was a right translation, it would give us the belief that most likely this cycle will also play out in a normal 4-year cycle. So now if we delete all of this stuff and come into more or less where we're at today, we have to factor in how this cycle is going to look. because this is all we have now, right? We just started it at the bottom of our most recent bear market. So if you're going 4 years from our most recent bottom, if we're going to have another 4-year cycle, you're measuring peak low to peak low. So we're also doing the same thing. If we go 1,450 days from the bottom we just went through, it pretty much gives us a target of the end of the year 2026, sometime in the Q4 of that year. So inside of this cycle, you know, we've been uptrending like crazy. We're back close to those prior all-time highs. But if we're looking at half of this range, we're going to be looking 714 again, even though I have this set as a little bit of a different point. Basically what happens is if this cycle front runs and we start breaking out, and we're doing something like this into a new bull run, and we're doing it before we're even at the mid-range point, in my opinion, we're going to get the opposite effect, where this would be called a left translation, where we'd be topping on the left side of the mid-range inside of a 4-year cycle, which is a left translation. So what happens in a left translation, it basically just means that we would have the opposite of a 4-year cycle. Instead of a bullish 4-year cycle, it'd be like a bearish one, where it'd be like 3 years down, 1 year up, instead of the 3 years up, 1 year down that we've been at. So that's how I'm factoring in what we're seeing today. I don't know exactly what the top will look like, because this scenario could play out and we barely even make an all-time high. We could consolidate here and, you know, make this short-term move maybe to like 100K or something like that and start topping, and it would still follow this. We don't know what the price action is going to look like, but if we are front running and into a new all-time high, because of the fact, if we're looking at how long it's taken from our last cycles going from this high to the point of making a new one, this was 1,250 days. If we're looking at the last cycle, this one was 1,100 days. If we're looking at where we're at today from 69K, you know, we're sitting at just under 800 days. So if we start breaking out, in my opinion, that would be the signal for a left translation, and it would be a little bit more of a bearish type of event. I want to see us correct in here, you know, like I was sharing with you guys, where we come back down, retest this trend line, consolidate before going up, and then topping on this right side. So that's more along the lines of what I'm watching for.
I'm looking at that Bitcoin, and I'm looking at it as like we didn't go down the typical 85%. So we only went down 75% on Bitcoin this time. So like I see it as definitely that the price, the volatility is getting squeezed out of Bitcoin. And it's very possible that we do see a left translated cycle this time. And some of the folks out there think that this would lead into something like a extended 10-year, decade-long like sideways consolidation pattern, something unlike we've never seen in Bitcoin before, which would be, which is kind of where I come in with this theory that, you know, perhaps because the opportunity for the everyday man gets taken out of Bitcoin and Ethereum, for example, being that they have this really high positive correlation, that maybe that money then would flow into something that's like kind of decoupling away from that, and that's like that DeFi sector.
In theory, that's where you would expect the money to gravitate, especially if crypto is to be, you know, adopted on a mainstream level like we've always kind of anticipated it.
Yeah, I think a lot of times. Yeah, go ahead, Crispy.
I was just going to ask you guys, what do you guys think? Not on the charts, but like in real life, what would be the motivation behind the market making a left translated cycle? I'm kind of like guessing in my head that it's because, right, people like money. I like money. So for some reason, people can't make money retail in Bitcoin. So therefore, demand is kind of falls back a little bit. I don't know. I'm guessing that how that would happen is that the people that already own Bitcoin are the ones that cause it to happen by just continuously dumping. Like they're like, I have enough money. And
yeah, well, I'm looking at that too, Crispy, but I'm seeing that FTX money that has to get, you know, in the Luna and Celsius, like people have they have to get paid back. And then you got the Mt. Gox coins coming online. So there is like this tremendous amount of sell pressure that's going to be coming into the Bitcoin market right around the same time as this ton of new demand is coming online from the ETF. So it's almost going to have this neutralizing effect, because you're going to have all this new supply coming onto the market at the same time as you got all this new demand coming onto the market. And it might be like a perfect storm. You know, when gold's ETF came online in 2003, gold went up 420% over an 8-year period. And so maybe this cycle does kind of play out a little bit. It starts its own new, maybe we are in like what that Koosh guy is talking about, like this flat top correction mode. You come test the highs, triple top, you come get smacked back down. I don't know what the level, 38K comes to mind, 32K comes to mind. Some of these levels come back smack down to that level as a mid-cycle retracement. And then that you do end up getting that really right translated cycle, but it gets extended. You get like what Ben Cohen calls lengthening cycles, right? And the halving is going to have less and less of an impact. It's more of just a narrative now, and not as much of an impact on actual mining revenues. Because at the core of this whole thing, what drove the original first 2 to 3 cycles on Bitcoin was miners, right? Because hash rate always led price performance. So hash rate would the inflation is the carrot on a stick, and this is what makes HEX such a powerful alternative to Bitcoin. We'll talk about later in the T-share system. Is that the inflation is always going to get minted, right? Or is always going to get printed. So then someone needs to mint it. And in this case, when you go from like, let's say mining 50 Bitcoins per block to all of a sudden 25 Bitcoins per block, that's a lot of change of units per block. And that's a lot of change in the amount of revenue, especially in Bitcoin's most parabolic times. So the way I see this going is that Bitcoin halving may have less of an impact, but we can think of the oncoming supply from these events as they having their own halving effect, because we're having a hyperinflation moment again, where you're getting all this supply dumped on at once. And so it kind of sets up nicely for DeFi as an alternative place for opportunity. While all that's kind of getting sorted out in centralized crypto, decentralized crypto is going to be starting its own cycles. And I'll make an argument for that as we go on throughout the presentation.
Well, that's the question. Will it like decouple? Will any of this stuff decouple? Will AI decouple and make its own thing? Like what will end up doing that? Because like history has shown that there's always those outliers in asset classes, and crypto right now is like, people don't realize how early it even still is now. Like we are finally at the point of mainstream adoption, but when I got into it, I'm not even kidding. Like you couldn't hardly use it for anything. Like you could buy drugs on the internet. That was pretty much what people use Bitcoin for. So to see everything that's kind of transpired from that point, I would expect that there could be an asset class that decouples. And when you're looking at the total market cap of DeFi as a whole versus how much money is inside of like TradeFi and all of the institutional everything, and then you're also factoring in how much value like blockchain unlocks that we've never really had a way to value before. Like, there's so many different catalysts that it's impossible to predict. We can only speculate, but like I believe in DeFi more than anything. Like if anything's going to get global adoption, why would it not be DeFi? It's the thing money is the most important thing in our entire world. That's what everybody runs on and lives off of. So it's like, of course it's going to center in DeFi. The question is, could it actually decouple itself, or will it be a while before that happens? Or, it's impossible to say really, but that's kind of the proving ground that DeFi is at right now. Will it be able to?
Yeah, trying to predict that's going to be a challenge for sure. And knowing exactly what narrative sparks at what time. It's like, who could have predicted DeFi summer of 2020? It was the innovation of Uniswap that did that, but it didn't exist before that. So, I think in this case, regulatory overreach and winning that battle is going to be one of the best obvious catalysts that's going to push it in that direction. And if there's any signs that we're seeing of that early signs, it was the price movements in the Pulse chain ecosystem after the founder announced that he's going to protect human rights, basically. So it remains to be seen. A lot of these tools that were built on Ethereum in the past, really, really good ideas like Aave and Liquidity and all these protocols had so much potential, and then it was gas fees that killed a lot of that and made it unusable for a lot of users. Whereas having that parallel infrastructure and like Pulse chain, it's a duplicate directly, you could see this migration from the expensive chain onto the chain that we can actually end up using for all intents and purposes.
For sure.
So let's take a look at the bridge here. So this audience here is like largely in the HEX and Pulse community. You guys were up a lot on the bridge here. We've seen this come up from 68 million at the low just a few days ago, and now we're up to 94 million. So it's up like a $20 to $25 million change. As I said at the HEX conference, a lot of that change came from HEX rising in value. So because HEX price doubled, almost doubled, this went from being around 11 million to now close to $20 million of virtual value that could be lended to Pulse Chain to help bolster that ecosystem and give you something to trade for something else to help rise valuations on that chain. As well as we saw a lot of stable coins, DAI in particular, and USDT getting bridged into the chain, and some Ethereum as well. As well as this USDL balance that's Pulse Chain collateral-backed stablecoins. That's now at a new all-time high balance of $27.6 million of native stablecoins to Pulse Chain. And then we have an additional $3 million of Coast, which is another native stablecoin on Pulse Chain. So the in terms of financially, this thing is growing rapidly on that news. And I just wanted to bring light to that first before we go into the price charts.
How does 94 million compare to like other bridges in like all of crypto? Do you know?
I think it's pretty modest. I think a lot of the other bridges might be bigger. We can take a look here at DeFi Llama and see. There might be some total on here that we can see. Bridges overview. So TVLs. Let's see. These are volumes. This is volume tracking. Inflows and outflows. I'm seeing like Arbitrum had $144 million of net inflows over 7 days. So by comparison, Pulse Chain has seen like $20 million of inflows over the last 7 days.
Right. Okay.
But I mean, if you look down this list, look at minus 2 million, minus 126 million, minus 15 million, minus 10 million. And then any of these that are in the green, that's like 1 million, 1 million, 1.6 million. So, I mean, to see a chain go up that much, here's one. Polygon was up 34 million in 7 days. So, yeah, I would be interested to know that too. I'm not going to spend too much time digging around on that, but maybe you could add that to your analysis to see, what are other bridges doing? How much TVL is on a lot of the other chains? Sometimes TVL can be tricky because you don't know, is it, illiquid shit coins or is it actual like deep liquidity on meaningful pairs?
Right.
So that's something you want to take another step further in your analysis if you're going to do this. Definitely a great question. So here we got the combined HEX price. You can see that we're kind of trying to break out of this falling wedge here currently. And this isn't in dollar terms, this is in pulse terms. So what we're seeing here, as I measure these coins today, I want everyone to remember that we're trying to measure HEX's performance in pulse terms, because Pulse is going to do all the heavy lifting this cycle for us. Pulse Chain is the asset to beat in terms of real returns, because everything flows through the bonded liquidity of what's bound to Pulse Chain. So currently the combined hexes here are at 286 pulse per unit. And we'll break that down here in a second. If we flip back to the dollar chart, it's well broken out. So it's performing well against Pulse, but it's performing better against the dollar. This RSI here is over the 70 level. Perhaps it's going to put in a lower high here on the RSI and come back down to test this grind line of support. Or you could see a secondary impulse. I don't know if you have any thoughts on that.
Oh, yeah. I mean, I honestly think it might either or. I think it's going to break out fairly soon, though, regardless.
Yeah. Yeah, because like we had all of this time, let's take a look at the regular HEX chart. There was just all this time here to buy. And I mean, I'm looking at log on linear. It's there was so much opportunity. Literally billions of HEX, of ETH was swapped back and forth down in this range, going back to June of 2023. And you could beg the question of, hey, if we didn't get that SEC problem, maybe this would have bottomed here, perhaps, and you would have never even gotten a chance to buy this low. So
probably so. I can almost guarantee it wouldn't have it wouldn't have done as it wouldn't have went down as much as it did had the SEC lawsuit not happened.
Yeah, I'm with you. Crispy, you made me think of putting on this 111-day moving average. Did you want to speak to that at all?
Well, I'm not an expert in that area of the golden ratio, but the 111 in conjunction with the 350, from what I've come to understand, provides some real confluence into being able to call when we're moving up or down, and actually have confirmed it. And so what I do is I watch that 111 versus the 350-day moving averages to identify crosses, for where we may see either some sort of resistance or a flip to support. So that's how I've been using those averages.
Okay. Well, we had our last cross here, so it was kind of like a fake out. You know, granted, this gets into my theory about, you know, had you not seen pulse chain, there was a good chance that we wouldn't have, you know, of course it could have come down and tested 1 cent as support one more time, and maybe we double bottom, something like that. But you know, once you got that cross there, that would have been the signal that this you know, theoretically should have held if you didn't have a doubling of the supply of HEX and all that arbitrage and divestment of economic energy out into all these other projects, of which there were literally hundreds of. Which is why I think it's pretty crazy, you know, folks, the opportunity to buy EHEX down here, it was a gift. It wasn't, never intended. It probably shouldn't have happened. It was just a function of circumstance and bad judgment by big holders, really, ultimately.
Mm-hmm. Well, if you take a step back, you know, what you just said about the launch, right? The timing of that cross would have fit really well with the fact that, you know, it had already gone out with Bitcoin during 2023. It would have been offset by several months, but yeah. It's really hard to see. You know, I really, I know I've said this to you before, maybe some of the people listening, but I kind of look at this whole launch and the forks being an awful lot like what happened to me when we had Big Payday, right? Because it's very difficult to anticipate and understand, and there's tons of FUD. I mean, I understand technically, yeah, you got a copy, right? But what you just said, a lot of people just heard, but it doesn't necessarily penetrate that the value that we had got split.
Correct. Yeah, and this was something I was charting back in before the fork was, you know, this possible 89% crash, and on some of these charts, this wick down all the way down to 0.001, so like down into here. Funny enough, but on this chart it didn't show up. But if you look on TradingView, this wick actually goes all the way down here to 0.001 and goes right back up. And this was when the supply increased by 30% in one day.
Oh, wow.
And so we had this, like, basically people gamed this period of time called the Big Payday, where everyone loaded up before it, and they set stakes in right here. And if you were staked during this day here, you got 30% more HEX on that next day after the rollover. And then it printed this big red candle. And that was basically like a sell the news event. But what blew everyone's mind is how it reacted after that. So what happened was the origin address came in here and staked the day before all of its supply, which reduced payouts for everybody, because remember with the HEX T-share system, everybody's competing over the same pool of daily payout. And that's calculated by 3.69% APY, basically, is what it is of the total supply of HEX, which is always growing. So that means that, you know, the total HEX supply is always growing, but most of it's deferred out into the future because it's staked at the time, right, and currently in the moment. But but he staked there because he basically prevented all that new supply from getting paid out to. So yeah, everyone got 30% more, but they just got less of that 30% more of that pool, right, for that day. And then, but those who did game it sold it down, and then the reaction was what was amazing was that within 30 days the price went up and made a new all-time high and hit 2 cents on New Year's. Yeah. And then they kind of set up for that big consolidation here, W bottom at 0.6 of a cent, and then you know, a couple of weeks later we rocketed out and went. You know, I think Pulse Chain gets announced somewhere in this period here, so it makes sense that that's why we kind of got that markup.
Yeah, my analogy to that was just this: that you know, with all the FUD, the FOMO, everything going on, I thought I could try to game things. Maybe I wasn't by myself, right? But I thought, there'd be time, and I should wait until after big payday for some of my commitment, right? And so I did. But as it turns out, I would have been a lot better off staking and chilling, ahead of time, and just having my plan ready to go, because I just didn't understand how valuable the additional bonus would be, even though it was truncated, right? I still didn't understand, because I made that decision before the OA did it. And so how do I see that relating to this? I see some of the same things going on when we got the fork with people, a lot of FUD about what's going to happen, and a lot of misunderstanding about the value. And it's kind of like a magician trick. I think Johnny Chaos may have said this a couple times too, like, don't look over here, guys. I just gave all these people who believe a full copy. I did. And meanwhile, I got everybody focused on the price will never come back ever. Right. But meanwhile, the people who wanted to be part of it, decided to be part of it, they all got a copy. And who would you argue today? I mean, every day that goes by, of course, gets better. But even prior to this big jump in price, would you have argued that the pulse chain side had no value? No, it was twice the value. It's kind of it's just really hard to get your head around, at least for me sometimes, how this actually works out, right? Time wise. So I'm super thrilled about what's happening now.
Yeah. Yep. You think of it like just like a doubling of the supply effectively for those holders. And then the opportunists just needed to know, they just needed to secure their profits in this zone so that they could apply them, down here potentially, or, different people played it different ways. I was going to show you too that this double bottom here that occurred, it was a higher low here on the dollar, but if you go against Ethereum, it really was a clean double bottom, and it was marked by these two wicks double bottom here on the Ethereum pair. So in Ethereum terms, we're not even quite back up to where we are in dollar terms, is where we were here, because Ethereum's got strength in it right now, right? It's sitting between 2,700. And so, always measure your charts in the native assets, because it gives you a different picture. I think something that would be cool to show you that I hadn't thought before I came live today was, see, Donovan, I want to see your reaction to this kind of analysis on this linear chart on maybe like a weekly for Ethereum HEX. Just this, it's kind of like tongue-in-cheek in a sort of way, but if we go back to this period here, oh, I'm sorry, I got the wrong chart. I got to look up against ETH. And this same pattern plays out on the HEX Bitcoin chart as well. But this is one of our members in the community. His name is Kareem. He talks a lot about the crocodile tooth pattern, which is this giant falling wedge that appears on the HEX ETH pair. And just to think about the magnitude of the move that comes on the break of that. And we've seen it before here. If you look at back in time, you had another one of these crocodile tooth patterns, or it's just like a bigger falling wedge, and you saw that move topped out around 2,000%. And now we're printing an even bigger one. So the macro trends, like you're looking at this getting shrunk down, and this thing just going like parabolic and like way overperforming. You throw like a Fibonacci tool on this, and you can really have a lot of fun thinking about how hard could HEX overperform ETH or Bitcoin this cycle.
Mm-hmm. It's true.
Okay. Last thing I wanted to touch on was just the HEX to HEX ratio. So we're currently seeing, this is P-HEX over E-HEX. So currently we're seeing E-HEX actually come back and take some of its value back from the pulse chain side. Last time this happened, P-HEX gained on E-HEX for a 140-day period before breaking that, and then significantly getting marked down. It was minus 52% in 6 days. And a lot of folks, some people in my community have been ratio trading this chart in particular. And so I encourage you guys to look at this, and E-HEX is kind of holding up a little better at the moment, which is why you're seeing this potentially, it's getting rejected off this support line that's now flipped as resistance. And I expect E-HEX will continue to overperform in the short term, because as the news gets out about what Richard's doing, it's easier for folks to just go buy HEX on Ethereum than to think about the complicated steps of bridging over and learning a whole new ecosystem.
Well, what do you think holds more long-term value? Well, like 2 years. Let me give you a specific
2 years. In 2 years, so I've been this should come as no shock or no surprise to anybody. I've actually been championing HEX the whole time because it's closest to the money printer, and the money printer is the institutional adoption of Ethereum, and the its familiarity and optics. Like, people know HEX, they see the whole chart with the whole history. They've seen how crazy it can overperform Ethereum. ETH whales are going to want to support their chain, so they're going to be more likely to buy up HEX on their chain and push that price up first before, abandoning their entire chain and like going to something completely new in Paul's chain. And so in terms of where I think, I do believe that EHEX sometime this cycle will actually go at a premium to PHEX, not because Pulse chain is unsuccessful, but because it's going to take longer for that DeFi narrative to spin up, and for HEX on Pulse and for Pulse chain to become the front and center of DeFi and that DeFi experience. So I'm thinking EHEX, it's going to do crazy things this cycle people are not expecting.
That was my thought too. Not so technical and data driven and thought out, but that's kind of what I expected to outperform one another.
Yeah, and I mean, on a long enough time frame, because that, as we'll dig into in a little bit with the T-share system, they're both kind of doing the same exact thing anyways. And if gas fees comes down on the Ethereum side, I don't see any reason why they're not going to be in strong competition with each other, and they will oscillate around parity, like 1-to-1. I don't know what the margin is. It doesn't matter to me because I hold equal amounts of both at this point, but I was heavily targeting EHEX for the last 2 years, and it's only until recently that I actually started buying PHEX as it came down under a cent. And now look at how much that's changed almost overnight.
Right.
Yeah, it's another one of those things too, right? With how we view things, how people view things. If you go back and do the numbers yourself, anybody watching, you can go look at what DCing into EHEX and just holding it since launch would do, and you're up. You're particularly up now, but you were up all along the way here. And I know people cherry pick dates for sure. I mean, maybe it's not the same from the all-time high, but can you imagine you're in an asset for 4 years and you're still in a profit if you've been DCAing?
Yeah, especially after that huge upside move and buying those each top level, local top, and all the way down. It would, if you want to pull that up too, that we can cover that as well, Crispy. But here we got, some traders like to look at historical volatility, and here is the HEX price historical volatility on a 365-day rolling period. And the thing I want you guys to recognize is, ever since the very beginning of HEX, when it went down minus 99%, this chart's never put in a 5.1 on the historical volatility ever again. It's only ever trended down, even during the most parabolic expansionary phases of EHEX's move to 56 cents. This volatility still couldn't keep up with the volatility of the early days, where things were swinging hundreds or thousands of percent in a week, until we bottomed out somewhere around that 1.7 bottom in January 8th of last year. And ever since then, this historical volatility started to trend up. For those that were here, we remember this move from 1.7 cents all the way up to like 13 cents. And that marked a 700% increase roughly over the dollar. And just this volatility up, volatility down, this huge moves and swings has kept this on a yearly rolling basis, volatility rising. And just look at this just now with that big spikes down, the double bottom on the wicks against Ethereum, and then the rip back up to 1.12 cents. We've seen the most injection of volatility that we've seen on this particular chart going back to as far as March of 2021 is when we were at these levels last.
Nice.
It's pretty crazy. There's definitely a lot of deviation considering we made a lower low and then this whole market or the volatility is actually breaking out throughout of it. I mean, same thing happened like during the blow off top. You had deviation where it was pretty much flatlining, not doing anything, yet the price was going up, 10x or whatever it did in that short while. Whereas like now we're getting the same thing. It's just on the inverse, a lower low in price versus the volatility is actually breaking out now. So it'll probably, well, I mean, the way that the volatility looks, it literally looks like it's going to completely reverse.
Yeah. Yeah, really good analysis, And by the way, this is Donovan's first time looking at these charts, and so that's part of the reason why we got him on is because I just want him to. It's gonna, he's been looking at charts for 8 years. He's gonna see this and he's gonna know immediately. Look at on a 28-day, which volatility meter, we're at the same level as we were at the very beginning. We actually exceeded them, which is just insane. So definitely keep your eye on the HEX price. It's gonna start to get very crazy, I think, in the next few weeks to months. So here we got some price fractal projections. Here's one. So the HEX price here is in this like lighter blue color, and the data point stops here on November. I think it's November 1st, November 2nd, November 5th. And then from November 5th, HEX did decline. So I basically ran these fractals. This is Bitcoin here in navy blue. From its second cycle, this here fractal low on the price for HEX would have been around 3.8 tenths of a cent, and that's roughly where we landed. We think we landed around. Let's see here, I think it was 4. So the wick low 3.8. Look at this, 3.8 exact here on the dollar. And then so going back to our projection here. So if this is going to play out like Bitcoin did, we could be seeing prices of 1.2 cents, get rejected off that, hover around, consolidate for a period, go up, test 2.3 cents by September, and then going into 2025, have a first cycle top around 40 cents in May of 2025 with a short period of sideways, and then a final blow off top in December of 25 or January of 26 around $2. And you could say you could say combined HEX price if you want. You don't have to say this is just one of the hexes. To be more conservative, let's just say the combined HEX price hits. If it performs like Bitcoin, like around $2 sometime within 2025. Any comments on this one before we go on to the Ethereum fractal?
Not really.
I think a lot of these, keep in mind maybe so you don't go insane, is like the chances of this playing out like this exactly is almost near zero. It's just more of like just to look at the general trend.
Yeah, for sure.
Just like the possibilities of what could happen.
Yeah, and so here is
if we're going to have another cycle, like that is what will happen to some extent. Like, yeah, price action's going to vary to some, extent, but this is what happens to cycles that start over.
Exactly. And then, so here's like Ethereum kind of, look, HEX lives on Ethereum, so it would make sense that the price would, potentially perform in some of the same ways. Mm-hmm. Again, here bottoming around, this one bottoms at 0.005. So we did go down a little deeper than that. But so for its second wave of its first cycle, if we were to follow that pound for pound, we'd be seeing 3.6 cents by March. And then we'd actually run onto a short-term local top in June at around 30 cents with a retracement back to 12 cents. So it doesn't look like much on this chart, but this could be like a 3x range over like a 3 to 5 month period where we're trading sideways between 30 cents and 10 cents. Well,
it's like a 50x move just like to that level in the first place. That's what people don't realize is like it's like 90x. Well, not anymore after we broke it. I don't know what it is, but it was like 100x to the all-time high. It was like 50x to the mid-range. So it's like it doesn't even have to, like I bought almost the exact bottom of Ethereum last cycle, and I think I made max like 45x at the very peak. So it's like you don't even have to hold it all the way to the all-time high. It could do like half of a cycle, and you'd still probably outperform like the vast majority of stuff. Even as good as Ethereum did in the last cycle, you'd still outperform it. So it's just something to keep in mind. The upside potential is big because there was basically like 2 bear markets that happened.
Perfect cue for me to pull up the double bear market chart. let's go to refresh this page. So this is we're all familiar, maybe not everyone viewing, but there's this thing called the pi cycle bottom indicator, which measures these crosses between the green and the red line. When the green crosses down across the red line, that marks the pi cycle bottom. So the first pi cycle bottom for HEX this cycle fired off here around in June of 2022 at a price of, on the wick low, it was 3.2 cents. And it took 217 days to cross back up, for price to cross back up over the green line. Fast forward to the fork in May of this last year, and then a huge markdown in price due to the divestment into other assets. Pi cycle bottom fires off for a second time at a price of around 0.8 cents. Fast forward 217 days, the exact amount of time it took last time, and we've just now crossed the green line. So at a bare minimum, if it plays pound for pound like the previous price move up, you'd be looking at 240% from here, which would put you around 3 pennies within 42 days. So I don't think anybody wants to fight a trend like that. Best to just, get some now and not get mad that you didn't buy down here or down here. It's still early in terms of where this thing can go. And I think that's kind of what these price projections are trying to explain to you, so you don't feel so left out yet.
So did the after the launch of Pulse Chain, was the price crashing because there was just a lot of whales from the project dumping? Or what do you think just the fact that they duplicated the token more or less and launched it over there, that was the defining thing?
So there was a lot of, so this is something that, we don't talk a lot about, but that during this period here, this was the banking crisis, and what happened at this time frame. So let's set up the narrative here. What happened? So during this period here, there was the banking crisis, and USDC depegged, and hexagons were flooding out of USDC and back into HEX as a store of value. They were leaving one, going into the other, and so during this like two month period of time, there was a lot of traders playing this trade. But during this particular depeg event, hexagons flood back into HEX. And then the price just continued to perform from that level. But at this point, the amount of traders was almost insurmountable, and we saw smart HEX whales take profits between 9 cents and 12 cents. And it was basically straight up, straight down during that time frame. We basically went up, and within 6 hours, we were back down, smack down to below 10 cents. And then this was just profit taking from traders. Then the fork happens, and a hype move pushed it up to 9 cents again, and then it immediately inverted. And there was huge, massive amount of profit taking here, and here to protect and conserve hexagon resources. At this point here, there was like 3,500 to 4,000 ETH in the pools. And when it got down here at the lows, it was sitting around like 50 ETH. It was like abysmal. 100 ETH maybe. It was bad. Let's see here. We have 48 ETH in September, 50 ETH. Meanwhile, there was like 200 and here's the ironic part is the amount of HEX on the market always stays pretty low. It's always below 200 million. It bottomed out here at 99 million. And once you get below 100 million is when things start to go parabolic for HEX. So when if we decide we want to get into the liquidity analysis side of things, we can take a look at that. It was a mixture of traders up here, and then it kind of turned into OGs just having to protect their resources for the fork. All right. And so then this would have us, we play out like Ethereum, we're looking at $1 on combined hexes conservatively by January of 2025. Again, we're not making any statements about how it reacts if Bitcoin does this or ETH does that. We're just saying that if it plays out like those past charts, that's how it would play out. Last one I got for you guys is this the HEX chart if it does what HEX does. This is HEX's chart, just literally repeating. I think the thinking here is that, in the beginning HEX, I know this blue little line starts here, but actually the starting price was up here, and it actually went down because we're not getting that data because it was on Bidesk exchange and it wasn't on the Uniswap pair, so we don't actually have the data going back that far. But for all intents and purposes, the price of HEX actually fell minus 99% before ripping and doing the 10,000x. And what did we just get again? Minus 99%. And so this would actually be a repeat of the entire cycle. This means that we could be seeing 15 cents as early as Q2, with a sideways period between, maybe in a 3x range between 5 cents and let's say 20-ish cents, going into the end of the year. And then toward the end of the year, we start to break out. We get new adoption. Maybe some stuff happens with the case, and we go off for our parabolic blow off top around between $8 and $12 in June of 2025.
I'm going to sign up for this one. Is that okay?
This one gets the HEXFire stamp of approval.
Hey, yeah. Well, of course, I like more. More is better.
I think the thing to keep in mind is maybe there's an extended market theory here where all of this action gets right translated, so it gets pushed out farther and it takes a little longer, and that this chop period here, this 3 to 5x range, is going to be brutal for a lot of people. A lot of people are going to be buying tops, selling bottoms, getting wrecked, OGs taking profit. But ultimately, this trend that we started here is going to hold, and we should get, we should be seeing 10x higher prices this year, and then a sideways period before launching off going into 25 or 26. Cool. So I had Crispy start to work on this price model thing. It's called ARIMA. It's a forecasting tool that TradFi uses to project where price can go. Like, what are the upper and lower bands within let's say a 70% confidence band. And that's what these are here, I believe, right? And so this is this is the combined HEX price. The top gray line is like the upper bounds of where we think price can go based on past performance within our confidence bands, and the lower bands is where we think the downside risk is. And so ultimately the downside risk here is quite limited in comparison to the upside potential. Upside potential and peak performance here would be anywhere like between 10 cents as early as April. And if it just holds along that trend, you could see, 15, 20 cents by August. End of year, you could see 20 cents by end of year, easy. If we spend our time oscillating in here and working our way up the chart. Lower side, obviously if it died here and went flat, the downside's minimal. It's half of a penny where we just were at. But it's interesting to see when you actually use mathematical models to project out where price could go. It'll probably land somewhere in between the upper line here and, maybe like a parallel line, basically from our trend, which would put you like something like a trend like this, I would say. So that, maybe if the upper trend line is something like this, to 20 cents by end of year, we could play inside of this channel with any kind of overperformance along the way. A lot of times what HEX likes to do is it likes to do huge markups and then retraces for a long time, something like this. And then we get back into our bands, and then we start building structure, and then we go break out later on into 2025 or 2026. All right. We got golden ratio. Do you want to talk to this a little bit, Crispy?
Yeah, sure. I mean, this is our this is basically taking that golden ratio chart, and we were calling the pie bottoms and tops, right? And it just puts it in a different format, where I'm taking a ratio of the price to get to like an indicator, and that indicator just being telling us when, and it's not used in isolation. but it just kind of gives you an idea of how frothy we really are. Just how closely we might be moving towards a blow off top. In terms of the indicator, and of course, we get up there above those orange and red regions. You're like, yeah, we're probably going to hit a top here, and then this is being based off of Bitcoin, of course, right? Mm-hmm. And what's happened with Bitcoin. So we're trying to do with a lot of this, Donovan, is we had all this FUD in the HEX area, right? Anyways, we try to mimic some of the things in reality with real data that we use to measure in the rest of crypto, mm-hmm. right? To get common ground, right? And so this is another attempt at that, to try to get to that point where we're looking at this chart. We can basically plot just how close are we to what an indicator would be at the top. And this was using the GRM, I believe. Philip Swift, and I forget which organization he was from, is the person who really developed this idea that you can call the top within 2 days, based on watching the parabola. And when the parabola breaks, okay, things could always be different, but usually what happens when it breaks is it's over. Mm-hmm. Now, what's interesting about that is look what happened this last cycle, right? That's what happened in April. And of 21, and so if you were watching the parabola, like, yep, we're done. But what happened? We weren't done, right? Price came back up again.
And I mean, there's explanations for this too. Like this should have probably been the top when Richard called that break of the parabola. Mm. The GRM signal fired, top. It hit the red line here at the 1.0 level, same as it did on the blow off top of the previous cycle. So all that signals came in. It was just like the over leveraged and manipulation of things going on with FTX, Celsius, and Luna that was able to prop up this entire industry and push this thing to a marginally higher high. But in terms of the GRM, it barely even got up before it rolled right back over. Yeah. So this would have had to go to 120,000, like almost immediately from here, for this GRM indicator to kind of like come back up to the red line again, and give us like a clear double signal here. And it just didn't. There wasn't enough volatility and momentum in the market. So all the signs came in here that this actually was the real top.
A lot of the altcoin, happened both ways, because a lot of the main altcoin euphoria peaked at 65K. DeFi summer, NFTs, they kept kind of doing their thing after, but it was like a few outliers of crypto. Solana, Terra Luna, those were like the ones making new all-time highs after, but the vast majority of the hype was all at 65K. That was for sure the euphoric time.
Good point. Guys, remember to look at the market broadly like that, to see like you remember the Dogecoin FOMO and stuff going on, and then it top during this period as well.
Yeah, it did.
Yeah, so like you'll know because grandma's going to be calling, "How do I buy the little dog coin?"
Yeah.
So I guess just so we can quickly get the presentation moving. Things you look for here is these V bottoms during price moves. So like you get the V bottom at the bottom, and then you get these little ones in the middle of the cycle that kind of like set up for that final move. There's usually like a low and then a higher low and then a final blow off. You got a low, a higher low, and the final blow off. Mm-hmm. You got your low, a higher low on the GRM, and this is setting up for, Donovan, this actually is a good point to bring up. Maybe we won't see this just all in one move, like a roller coaster. Maybe we'll see this bottom one, sideways period, consolidation. We do get that right translated cycle. Finally, then about a year from now, we'll go up on the GRM, which will give Bitcoin more time to play out like a more traditional cycle, because we're not even between the olive band and the dark yellow band yet here. Mm-hmm.
I hope so. That would be the most ideal scenario for making, as fun as it would be for Bitcoin to just go into a new all-time high right now. I just think we'd make more money if it didn't. Like, even if
100%,
everybody's going to make way more money, and so you're better off like playing the slow game with it than trying to. Well, I mean, people just don't realize that it's like a snake eating its own tail. They want Bitcoin to break out, but like, is it really going to be beneficial if it does it so fast?
the answer is no, because we have it right here in the data where when the GRM just bottoms and goes straight up for the top, it's over.
Mm-hmm.
Well,
and this
isn't
was
there?
ju-
Oh, God.
No, you go ahead.
I was just saying, isn't there a psychological piece to this too, right? The longer it takes, the more apt it is for people to see the performance, to believe further that this is going to work out. For those who aren't in crypto, bring more money in, and so the longer we have, the more value will move into crypto.
Mm-hmm. And there's a lot to be said for what Crispy just said. That there's a lot of wisdom in that, where, especially if we're going to get institutions in here, institutions need time to position.
Yeah.
And build up a floor, position, build up a floor, position, build up a floor, position. And then at this point, this is when like mania happens.
Right.
But like last cycle, what did we get? A, CME buys all this up. B, C, correction, like 2 seconds to buy that dip. And then this is your floor, like this is your accumulation wave, and then just it's over. Like there was no time for institutions to position. Well, it was just such like the people that bought were just like, oh my gosh, the world's falling apart. This is a great buy opportunity. It was like everybody was so freaked out about the COVID, everything that was going on that, I mean, it makes sense why we had some weird little double top, considering like in a normal cycle, like when we don't have a global pandemic where people are actually able to like, do things with their money. I just don't think that would have been the same scenario, which is why like some people think that they've made the conclusion that because the last cycle was like not a blow off top, it's a sign that we'll never have one and it's the volatility dying out. And I think either or scenario could play out. But I think a lot of the last cycle top had more to do with the fact there was just a pandemic going on. Yeah. I look at my thoughts on that is, you had BitMEX playing games, doing Bart Simpsons all over the charts. And then, so your biggest exchanges with the most leverage was running the market during this period. Mm-hmm. And once they got kind of shut down or they change of hands or whatever, that was one liability out of the way. And then you had FTX come on, which just did this. And you heard Sam Bankman-Fried say it on stage that, well, how do you think the price chart moved? It's, you got to thank leverage too. You can't just banish it, like, because not Naomi, what's her name, she runs the blockchain bank, Custodia Bank, out of Caitlin Long. She was on stage with them and she was like basically demonizing leverage and saying how Bitcoin was meant to be held spot and spot traded, not backed by paper, so that the supply dynamic worked out and we could have a sound money system. She's on that thought. And Sam's like, well, how do you think we got that? Well, it's like, dude, Sam, if you didn't do that, we would have had a more like, lockstep approach to a regular cycle. And we could have maybe broken this. And actually then your biggest move would have come right between these two tops. And we would have went up and hit that blow off top at 300,000. But because there was no time for institutions to position and get traditional tools online and get the ETFs through and stuff, then you just didn't get that move. And instead, Richard Hart made the top. So
is a part of that also the lack of the retail investment in this last cycle? Because it didn't feel to me, of course, this is just like observation. It didn't feel to me like the previous cycle.
Yeah,
it wasn't. 2017 was special. I got to ride the whole thing out, and it wasn't. That's why I was so confident that we'd have a blow off top. I was like, man, this is nothing. Like, we got one more. We're going to 250,000. Like, this was just peanuts. Because I had remembered what that blow off top was like in 2017. And so, like, that's really what I was assuming was going to play out again. And that obviously was not the case. And I think that's really the reason why, is because we didn't have the same media attention that we did. Like, we did get some of that at 65K, but it was more centered around Elon Musk pumping Dogecoin than it had to do with anything else besides that.
Took the words out of my mouth. I was going to say all the retail attention got put into shitcoins. Shiba Inu, Dogecoin. A few guys did really well on that. One of our very own, Moon King, did really well on Shiba. Anyways, that's really good discussion, really good points. And in terms of the GRM, we can hope for this sideways period here between, in this case, it was from January of 2016 until March of the following year, 2017, where price was able to consolidate here. In terms of the actual number, I'm actually curious what Bitcoin was at. $387 to $1,800. So 3, 6, 9, 12. So okay, this cool. This is a 4x range for Bitcoin, but yet the GRM never crossed the 0.7 line. So let's take that thinking and let's look at HEX now. Well, where's the combined HEX price at? So in the previous cycle, it bottomed at 0.4, went all the way up to the 1.0 level, which, remember, it was a new asset. It had went down minus 99%. It had an Ethereum Genesis well pump the candle a 2x in a day, and then it ended up doing a 10x in like 40 days. So it wasn't exactly, it was representative of some amazing things happening all at once. But then it did actually do a sideways consolidation here. And then we had the announcement of Pulse Chain. And then it had that insane, look at how far over the GRM is over the red line here. So it was a low and then a higher low is what I want you to take away from that first cycle on HEX. We get our bottom here. Here's our V bottom, and it's not too far off where our volatility, remember, bottomed. I think volatility bottomed here in January of 2023, whereas the GRM bottomed here in September of 2022. And then this came up last year for our 7x move. And then we came back down, and it's creating a higher low, but it's from a way lower starting point. So if I'm looking at the combined hexes, like, look, we can get big markups here, and it's not going to send the GRM through the roof as long as there's sideways periods for it to consolidate. And we have all this room to work with. So the upside potential here is just tremendous. It's got me so excited when viewing it from the angle of the golden ratio.
Yeah, between this and the Mayer multiple, as I was referring to before about us having plenty of time, we have a lot of space right now. Now, could it change quickly? Yes, it could. But we got a lot of space. Leads me to believe the 4-year cycle is probably still intact. But it doesn't matter. We need to react to it when it happens, right? When the stuff happens. But for planning purposes, I'm kind of like thinking that's what's happening.
Yeah, so here we can see the Mayer multiple pioneered by Trace Mayer. It's just a measure of the price here in purple and its distance from the 200-day moving average in green. Typically, if you look down here to the bottom panel, whenever this Mayer multiple index goes above the red dashed line, it's a time to sell. Whenever it goes below the green line, it's a time to buy. You can see in past cycles, there's these periods of sideways on the 200-day moving average where the price will oscillate up above and below that level. That's usually represents a bottoming period. And then as the price starts to reach escape velocity and move away from the 200-day moving average is when you get this indexed price line here on the bottom to go up into overbought conditions, which is where you'd look to potentially take profit. So simple way of looking at this indicator is over the red line, sell, under the green line, buy. And a lot of this, the more time you get, now notice here in the previous cycle, as we alluded to before, as the price gets away from the 200-day faster and faster at a rapid rate, it shortens the cycle and there's not as much opportunity for setup because it forces the 200-day to curve up at a higher and higher slope, which shortens the cycle before the break below. Whereas on this cycle here, we have more of a traditional step-by-step, moving the defensive line forward, setting up a base, blowing up, setting up a base, and it'll continue to test this 200-day, and it'll actually push the cycle out farther to the right. So it's not such a vertical slope here on the 200-day as it was in the previous cycle. Right now, we're actually seeing just a nice, steady 45-degree incline with even some basing here, which is even more positive. Notice here on the Mayer multiple, we didn't even quite go into the buy zone. It just stuck its toe in a little bit and just tempted people that, hey, it might drop down, it might drop down, it might drop down, and then it never did go into the buy zone. So definitely cool to see on Bitcoin.
A lot more like 2017, and I think that's going to make a better cycle if it stays like that. Like the more that we just steadily, create some ascending support leading us towards that all-time high. I just think that the amount of upside is going to be so much better. It's going to be a more consistent cycle, and it won't be nearly anything like what we saw in the last one. And so far, like the price action looks pretty I mean, it's obviously its own thing, but it looks a lot like 2017 so far.
So if we take that thinking and we pull it on to the combined HEX price here, wow, what a chart. You can see that the index price here, back when Godwell stepped in the beginning of HEX, it just totally blew this out like crazy. And during the bull market here, it was a pretty steep curve on the 200-day moving average, but the price was actually bouncing off the sell line as support because it was just so insanely bullish and there was just so much economic energy flowing into HEX. But once that level broke, it was nasty. It marked the beginning of the deepest, darkest bear market that we'll ever see in HEX history. The second time we got the minus 99%. So I think the point here is that as the bear market rages on and there are periods of sideways, it gives the 200-day moving average time to catch up to price a little bit. The more time going sideways, the better. And then it tees up for an opportunity to go take that out. And that's kind of what we saw last January, where the price bottomed around 1.7 cents. You could see that the index price line was like climbing here, and holding that as support before queuing up and consolidating and squeezing and then popping up over that. And then within just a short 3 months, it was over the overbought line. And then, because of the traders and the profit taking of everyone that was underwater from this period, basically exiting during this period, and then the fork, and then the divestment and the hedging and the arbitrage, it gave us a second chance, and we hit that double pi cycle bottom on HEX. And then the SEC crash even put us into a deeper state of capitulation. So, I mean, you had so many bearish things lining up all at once to basically give you the buy of a lifetime, guys. And we spent about 3 months down here on the Mayer multiple, hit that low, and you probably won't see this low hit again ever. I think, let's say it says a 0.2. I got a 0.2 on the Mayer multiple down here. You'll be lucky to see that ever again on the combined HEX price, because even when you go back to Bitcoin, if we had the full data set going back as far as we could, the retracements were deeper and deeper. Like the first cycle of Bitcoin was minus 95%, second cycle was minus 85%. This most recent cycle was minus 75%. So the downside's actually been getting limited. Now, if we have a more traditional blow off top this cycle for Bitcoin, perhaps we go back to getting the regular 82 to 85% downwards move. But with all the institutional money coming in and the paper trading, we don't know what the implications of that are for Bitcoin fully yet. But so we consolidated here, created a triple bottom on the index here, and then boom, in the last couple of days we're in the middle of the trading bands now. So we're back into fair value. It's no longer a steal. It's no longer super cheap anymore relative to the 200-day moving average, and I expect that 200-day moving average to be flipped as support in any event that it tests. But it probably won't test here. It'll probably test later on. We're probably going to go up before down, and then this 200-day moving average will start to curve up on a positive slope before testing it down the road here in this cycle. People are asking you for this chart, Crispy, so you can direct them to your site or however you want to handle that.
Yeah, you can hit me up on HEXFire at HEXFire.io.
So now let's turn the corner here a little bit, and we'll start talking about T-shares and the HEX system. And I think the first thing that I can pull up, just to give some context and some data points for people that might not be familiar with HEX, is the Bitcoin hash rate. If you show it on a log from the all-time, remember I was a Bitcoin miner and Ethereum miner before I was ever a trader or anything like that. I was always focused on seeking passive income, looking for that 6-month window when price would be going parabolic and you'd just be raking in a fortune in daily revenues mining Bitcoin. And so because that's my cup of tea, I understand that that's the economic undercurrent of what makes Bitcoin tick. I saw that same opportunity in HEX because HEX is a better Bitcoin in the DeFi world. It's just got a proof of work change to proof of weight, as Richard coined. But the thing that I want to make really clear here is that the inflation is the carrot on the stick. That's what everyone's chasing. And in HEX, if you have all of the HEX units, you can get all the inflation because you can set up like an epic staking ladder or do rolling stakes and be getting massive payouts on a semi-regular basis. So the competition right now, when the price is so cheap, just as it was in the early days of Bitcoin, was the units of Bitcoin, or in this case, mining units, to get the best, most efficient hardware at the best price during the low periods where price was depressed and hash rate went flat. So you could think of HEX staking in the same way as, in dollar terms, HEX staking is flat, adoption's relatively flat. People are in that absorbing units phase where you're trying to get as much mining equipment as possible. And in this case, it's not foreign mining hardware, it's actually units of HEX.
Right.
And in this case, you see from the very beginning of Bitcoin in 2010, this hash rate climbed first, way before Bitcoin price ever started to perform. And then you had the sideways period, and then hash rate started to climb, and then price started to chase. And because price came up here, it made mining more profitable, which made people want to mine even more. And they looked for creative solutions such as FPGA hardware or GPUs to slam this hash rate up even harder to get better returns, and then which created more FOMO and pushed price up even higher. And so that's the way I want you guys to start thinking about HEX mining, is the opportunity cost of getting the units and securing them at the lows to create a forever passive income stream for you and your family, generational wealth, so to speak. Because if you notice, Bitcoin always put in floor prices. It never came back to test these lows ever again. And HEX is going to act in a lot of the same way. Most people are blind to it because they're just looking at the price chart and it's down 99%, and they don't understand the T-share system or what's there at the core of the contract: immutable, no middlemen, yield.
So what do you think would happen if we went into some like major liquidity crisis, for example, the collapse of the dollar? How do you think maybe like crypto as a whole, but then also like, how do you think HEX in this ecosystem would fare? Do you think it would continue to do well regardless of, well, like if there was no more like central liquidity source of the world and we were all scrambling to figure out what the hell is going to be next and how to pick up the pieces, do you think it would last through that long term, or do you think that, I just want to hear your thoughts on that.
100%. Great question. All we can do is show you the data, and the data points to whenever the dollar goes down in value, Bitcoin goes up. And by extension, HEX, which is a better Bitcoin in DeFi. So think of this in the terms of the total market cap. Bitcoin goes down, dollar goes up. Dollar is in orange here, guys. Bitcoin goes up, dollar goes down, dollar goes somewhat up, Bitcoin goes somewhat down. Dollar goes down, Bitcoin goes up, Bitcoin goes down, dollar goes up. They're just inversely correlated. So no matter what, crypto is always going to perform in times of distress in the dollar. Dollar is getting debased or going down in value. Crypto is doing well. I think it's just a matter of education and getting people on the same page. I don't think crypto is going away. And in this case, HEX is just at that inflection point now where people are going to really start to understand it. And there's no better way to understand it than good marketing. And what good marketing looks like is huge fucking green candles. And that the 10,000x on HEX proved it, because we went from 10,000 stakers to 125,000 stakers in one cycle. And so if Metcalfe's law takes hold and more people want to buy it, it's going to push up mining revenues in HEX terms, in dollar terms, and that they're going to keep staking, which is going to push the T-share rate up. And we'll get into how that works in a second. So long story short, there's no world where the liquidity dries up, because it's irresponsible of the Federal Reserve to ever put the world back in a position like where they intentionally create a Great Depression. They will only ever print money to prevent recessions or depressions. And we see that in the proof of the stock market here, where you go back on like 100+ year time frame, and these liquidity crises are short-lived, and then you're about making new all-time highs in shorter and shorter time periods. So like we're never going to see a world where liquidity completely dries up. And if we're talking like end of the world scenarios, atomic bombs getting dropped in World War III, then I'm not really too worried about finances at that point anyways. So I think it's a moot point. And we see here on the stock market that the Fed's willing to do whatever they need to do to make sure that the liquidity is there to support the economic system. So where should we pivot here? So should we talk about, let's maybe start with this slide, Crispy, and then kind of just talk about like why even mine, or why is it important? You're muted, brother.
We could start with the basics, man. I just said something really brilliant. You guys are never going to hear it now.
Oh, son of a bitch.
So that's it. Hey, you know, HEX was designed. We go all the way back to Richard, and just take a moment, right? When he came out with the idea for Bitcoin HEX, and then it became HEX. The idea was, how do you take something that's worked, like Bitcoin, and make it even better, right? And his observation was that over time, if you had just gotten into this asset that you believed in, you wanted to keep, and you held it, then cycle over cycle, time in the market, not timing the market, you would do well. In fact, after a cycle, you're pretty much in the black, you know. And so you take that idea and you go a little further. What's even better than just having something and hodling it, you know, holding it, and you know, giving people a reason to hold it, as well as building the tokenomics, right? We have mining or HEX staking, right? And so the real, you know, market product fit is to be similar like a certificate of deposit, and that being the case, you earn rewards for staking.
Yeah, I think from a trader's mindset, to piggyback off what you're saying, Crispy, to hit a home run here, Richard knew that if you bought Bitcoin here and you just held it to here, you made the most money. As simple as that. And so he was like, well, how can I help the most people hold from here to here? And he realized that, well, what if we built this currency that would print more of itself, and if you just locked it up, which you're effectively holding up the price of the thing you're holding by not selling, and then you get to allow traders or buyers or investors to hedge any downside risk by printing more units. And the longer that you're committed to holding that token, the more you're going to get to, so the more of a hedging benefit you get to downside risk. So it's a way to basically play the price performance game on these long time frames. And the longer you lock, like if you lock from here to here, you know, your let's say an adjusted hedge risk is like this kind of a curve but if you lock from here to here, you're going to get more APY. And if you lock from here to here in time, you're going to get even a better curve of APY. So that the longer you lock, the more hedging you get to downside price appreciation. Plus, at the same time, you're getting the added benefit of you're getting to hold the asset longer.
100%. Yeah. And so when you start getting into the dynamics of how HEX operates, okay, so if we've established this idea that staking makes sense or mining makes sense, well, the longer you go, the higher the number of shares you'll get for the same amount of HEX commitment, not in time, but in HEX commitment. And of course, the best, longest stake was going to be the best stake, right? As you'll get you'll get exposure to the shares for the longest period of time and get the most shares for what you put in. And so, yeah, and that kind of brings us to this is this curve of, well, if you, what do you get? What do we think? It's a projection. It's a projection. What do we think, you know, your APY will be if you go out for one day versus 365 versus 2 years, 3 years, 4 years, 5 years, etc. And the curve kind of shows just how much better you do. And it's parabolic, I guess would be a way to say that. But, you know, as you get closer out to the 10 to 15 year mark, and that's why a lot of people who really have analyzed it, they're like, man, you know, can you imagine? Can you imagine just how, if it's a game and you want to collect HEX and you plan to be here in 15 years, why wouldn't you put exposure out there to do that? And anyways, this is a good visual because it shows just how much more performance I get out of longer stakes. And so then if you take that idea and you roll it one step further and you just borrow from TradFi, what did TradFi do? What does traditional finance do? Well, they ladder CDs, right? Why? set up liquidity for themselves, be available at the times that they want it, but also to maximize their exposure to the longest and the highest gains.
And so I think the way a lot of people think about this curve is, coming in from the outside, they're like, well, I don't want to stake all my HEX out 15 years. They're like, why the hell would I do that? I'm locked out of the next 2 cycles. I'm never going to do that. And so they get stuck on that point and they walk away from HEX. But they're not thinking about, well, if I put $10,000 into HEX and I put just $50 or $100 out 15 years, that thing's going to compound and give me a 480% APY. So it's just going to hedge against the other 9,500, or I'm sorry, let's just say $500 out of 10,000. So it's easy math. That's going to compound so that the 9,500 that I'm using this cycle to make money is getting hedged with the 500 I put out for a 480% guaranteed return in HEX over 15 years. So that you're more of thinking it in like tranches of like, okay, I want to capture $500 at max interest rate, $500 at a 10-year interest rate, which is a little bit less, $500 at a 5-year. And then you could see along this curve, this is projecting how much more HEX you're going to print over time. So the bottom scale here in time is logarithmic. So this is 1 day, this is 10 days, 100 days, 1,000 days, 10,000 days. Obviously, you can only go 5 days as max length before you can't go any farther. But you can see here that the curve, like basically, if you're going to decide to stake for 1 day or 1 year, the APY is only a 2% difference max, like 1.5% basically. So if you have $100,000 in this asset, why would you stake it for 1 year and have all that risk of opportunity costs of not selling a local top in the market versus just staking for like 30 days to get that 8%? And then at the end of the 30 days, you're like, oh shit, we just went up 10x. I'm going to sell some and being able to capitalize on that. But you still got 8% more coins. So it's like in the short term, it actually makes more sense to do rolling stakes like 30 or 45 days or something like that. So you can capture a free, risk-free 8% more coins. And then there's different ways to think about that. It's like, okay, now I've went the 45 days, I got 8% more coins, but maybe the price just stayed flat or it only went up 2x, and I know that's got more in the tank. So I take my principal and I stake it another 45 days, like maybe it'll local top in 45 days. But then you take that yield and then you punt that out 15 years to hedge long term. If there's any chance that it gets out there, you're going to be having 480% more coins at a minimum. And on that little bet that you got risk-free house money.
Mm-hmm. Yeah, that makes sense.
So the chart I like to pull up here is this chart here, where we can actually simulate, different kinds of returns. So I'm just going to use like a number that a lot of like people that follow you that do decide to take this trade down here at 0.4 cents, 0.8 cents, like they might be looking at, bringing in like, let's say $10,000, $20,000, $50,000. Perhaps they sniped that low where you like, maybe one of your followers sniped that low at 0.004 and they got away with 10 million HEX, let's say. And if they just stake that 10 million HEX for, let's see, how much did that cost them? It costed them 40,000. So let's say somebody was following you, they caught that bottom, they put $40,000 in. Now they're already up double because the price just doubled. So, but they staked it, let's say for 30 days. They're guaranteed to get 64,000 more HEX at the end of 30 days. But they just doubled their money because now it's at 0.009. So now all of a sudden their principal's worth 90,000. They've doubled their $40,000 bag. And now that 64,000 HEX that they're getting risk-free is $580. And then let's say they take that $580 a HEX, or 64,500 at the end of the 30 days, and they punt that out 10 years, and the price stays flat, it's going to be 175,000 HEX at the end of that 10 years. It's like it's a 27% APY, but it compounds, and we'll get to that in a second. And so like, that doesn't seem like a lot of change, but if we're looking at price targets of floor prices getting put in like Bitcoin, let's just say, what the hell, let's just say we bottom at, let's say in 2035, we're at 25 cent HEX. Well, now that risk-free 164,500 HEX that you got for a 30-day stake back in 2023, 2024 is now 175,000 hex, and the floor price is 25 cents. That was $43,938 you got risk free for just putting out free money, house money.
Mm-hmm.
And this is the magic of the T-share.
Because I didn't understand them at all. That's been the issue. I've never looked into them at all. Nobody's explained them in a way that made sense. So I've been like trying to understand. Because there's like people that get it are like so obsessed. Like the people in HEX that understand it, they're like you can't talk to them about anything else. But then it's like the person like me that doesn't understand it, it's like, what am I missing here? Like, what am I not catching? But I'm starting to understand a little better.
Can you let me try to give you a 30-second explainer that might make sense?
Mm-hmm.
So you've heard of a certificate of deposit before with the bank. And when you go in there and you go in the lobby and you look, or you go online and look, it says, hey, here's a CD for 1 year. This is your APY, minimum deposit, right? T-share takes the place of whoever in the bank wrote that piece of paper up and made that decision, right? Mm-hmm. Now, we as the users, because there's no person, right, that's out there doing it, we as users do all the action. But what the contract does is basically, instead of there needing to be a bank to tell you, hey, based on economic conditions, the APY we're offering this month is 4%, next month it's 7%, or whatever it is as it changes, the contract does it, and it does it with the functionality of the T-share. And what Axis is going to get into here in a minute is how, because of how the T-share works and the cost of it, as people enter the system and exit the system, they receive rewards, and it kind of approximates, compound interest, the way it works. And so, yeah, so the ultimate simple answer is it replaces the bank and the whole CD concept.
Right.
So where's a good way to go with this? Do you want to understand more payout potentials, or do you want to understand more how the T-share works?
Let's start with how the T-share works.
Perfect. So when you look at this chart, green line is the line we've been looking at all stream. It's the price of HEX. Red line is the total number of T-shares. So why is that number important? Well, the only way that a T-share can get created is if somebody locks up HEX. And the longer that you lock up your HEX, the more T-shares you get back. So you burn the HEX, you get T-shares. That's like your note that pays you every day. When you go to collect your principal plus interest, you burn those T-shares away and they're gone out of the system forever. So you can see as people have ended their stakes over time, those T-shares are getting burnt out of the supply. And the reason why they're getting burnt out of the supply is because every time you go to start a stake, you're competing against this share rate going higher. So in the beginning, it only costed you 10,000 HEX to buy a T-share. But today, it's 31,000 HEX to buy a T-share. So the reason why this red line goes up over time, which is it's measuring the cost of a T-share in HEX terms. So the reason why it goes up is because if you got in on day one and you got all the yield, and then you wanted to stake, and your stake ended 5 days later, and you wanted to restake all your yield plus your principal again for 5 more days, and it would only cost 10,000 HEX per day forever, you could basically compound and win harder than anybody else in the system, and you'd basically steal all the rewards, because you'd be like, look, I'm the biggest guy in the system, and I keep recompounding my bag because it's only costing me 10,000 HEX every day to get the same more and more T-shares every time I go to stake, because you got a first starter advantage. But the way that this system does it is it raises the cost so that if you end your stake 5 days later, it's going to push the share rate up. So if you restake your principal and your new gotten interest for the same amount of time, you're still going to get less T-shares.
Gotcha.
So it's pretty cool dynamic of that is that it allows new people to come in and old people have to leave.
And so because all these stakes are on chain, we can actually look at every single stake, and this is what this chart's done. We've looked at every single stake in the system, and we've said, hey, if every single stake ends on time and does not restake, this is what the T-share rate's going to do going into the future. So this is projecting a T-share rate of 56,900 hex per T-share. Currently, it's 31,000. So it's almost a 2x increase to get the same amount of yield for the same time if you go out to the end of 2026. So it's the T-share rate is doubling every two and a half years, something like that. Currently, this is what allows the APYs to compound. Because look at, if you went back here at the beginning and you staked for 15 years, everybody that comes after you to stake is getting less T-shares, but you're getting more of the pie because their system's awarding you hex per day based on your portion of the pool. And if you bought 10,000 T-shares at 60 cents a piece back on day one, the guy that's buying 100 T-shares for 50,000 hex per T-share and the price is up 100x or 1,000x, like there's no way they're ever going to be able to get the T-shares that you got 5 years ago or 10 years ago because the cost is going to be too great. This is what makes HEX so magical, is that it's everyday folks that have this. It's not venture capitalists. It's not big firms with pre-allocations that can dump on your head. It's literally everyday folks that are running the inflation, like that are the ones getting it and redistributing it to other everyday folks. And just the main thing here is that like the guys that got in earlier for longer are going to do the best, but even when their stakes end, they're never getting back what they once had in terms of T-shares, because they would have to come in to buy more HEX even with fresh capital from outside the system to get enough to stake for the same amount of time,
right,
as this T-share rate climbs.
Yeah,
and
100%.
That's why we're seeing this decline in T-shares over time.
Right.
Yeah, I mean, and it is volatile. It goes up and down, the number of T-shares, because it's reacting day over day to what happens with demand. Unless we had like some sort of like weird, super event where people came in and just adopted the hell out of HEX, it is going to be on a downward trend, because the system's just that strong, the number of T-shares. But here's the other side of it. That's always been a FUD point. People go, oh my God, but if that's true, what would happen if we do get adoption? And so adoption bad? No, adoption good, because adoption means people just took all the they just took all the supply off the market and the price goes up. And so what do you want? Higher price? You want more of something, right? More units. So it kind of balances itself out that way as well.
This is staker adoption since the fork. You can see like the green line, more people are staking on Pulse Chain, and less people are staking on Ethereum, which makes sense because people are scared of gas fees on Ethereum. When Gwei gets up around like 200 to 300 Gwei, a 2-year stake can cost you like $1,000 to end.
Is there any benefit from staking like PHEX over EHEX, or is it going to be equally the same? Is there like, is one like more undervalued right now and is a better one to be focusing on?
That's a good question. The most obvious thing is this, the way I look at it is the cost of gas on Ethereum really makes, really gets priced into the price.
Yeah.
Already. So you have that. So taking the cost of gas out of it, you wouldn't want to do so little that it eats up all the value. And of course, a lot of us didn't know that in the beginning, right? But now we know. We've been learned. But essentially, the system works the same way. Well, it does work the same way, same code on either. It's just that people take different actions. And there'll be times where perhaps HEX on Ethereum will pay a higher APY.
That's what this is saying.
Yeah, given amount of HEX, but it can vary quite a bit, as we go along. So,
depending on what model you look at here, like the Ethereum chain is actually paying a higher ROI right now because there's less people staking, because that adoption's down a little bit. I gotta find the right tab. Because the pink line Ethereum HEX adoption's down, there's less T-shares over there. You can get more yield. Which makes it reflexive. It's getting about 6% more ROI on Ethereum.
But surprisingly, like yesterday, we went to parity on T-shares on both chains. They're so close right now that they might as well be the same number. I don't know. It might change today, but they're really close.
And so when you're thinking about, is there an edge in the market from a trader's perspective? The obvious choice is that if you're well off and you can get a couple Ethereum, no matter what your circumstance is, to pay for gas down the road, you just want to get the cheaper HEX because they're both doing the same thing and they're paying relatively the same APY. Right, it's the same contract.
Yeah.
So that's what is went over ahead a lot of the pulse chain maxis is like it's the same contract. It's HEX is HEX, and it's cheaper on Ethereum. That's the opportunity. And long term, who's to say, if pulse chain gets wildly adopted, and there's 1 million stakers on pulse chain, and Ethereum there's still only 150,000 stakers, the payouts are going to be a lot better on Ethereum. Because everyone's competing over that pool over there on Pulse. That's why I think that if Pulse Chain really takes off and goes viral and starts to get really highly adopted and APYs drop far enough, people will actually seek the higher yield on Ethereum or vice versa. So if all the ETH Genesis whales adopt EHEX and they pump it to the moon and the APYs go down because all these big whales are staking hundreds of millions or billions of HEX, the APYs, the people are going to shift to Pulse Chain to get the higher APY. And so it's kind of cool that we have these redundant hexes on either chain that we can actually chase the better opportunity at different points in time in the asset that monetizes time itself and compounds interest for the user. No middlemen, it's all the buzzwords, right? No middlemen, no counterparty, immutable contract. It's an amazing innovation, and most people don't understand it to the depth that Crispy does or I do. So I feel like really honored to be able to help you understand this stuff.
Yeah, I appreciate it because there's no better place for me to obtain this information. That's for sure. And there's just been so much to it. Like I've had friends that have shared with me different things, but it's like, if you don't fully get it, like your ability to teach it to somebody is just not really there. Oh, and like, I kind of need somebody like to really explain things simply and cover the whole basis because there's just so much to it that, I mean, I dropped out of high school. Like I haven't passed a math class since I was in like 8th grade. Like I more or less don't know how to do well, I don't know. I'm not stupid or anything, but when it comes to this stuff like data and crypto, I was like, I like charts. Like I can look at the price chart and I can visualize what's going to happen. Whereas like with data and like fundamentals, I was like, man, what the heck? I don't know technology. I can barely type with 3 fingers. So I stayed away from that side of things. And it was more like, DeFi summer, that's when I started to realize that there is a significant advantage to being early to narratives before they happen, being positioned inside of these things. So this cycle has been all about me actually studying fundamentals, looking into different chains, understanding why we need certain things, what is actually unneeded at all. And that's kind of why I've ventured into trying to actually understand HEX and Pulse Chain and the whole, mainly HEX, because this is really the whole thing that you need to understand first. But I feel like you guys have done a pretty good job of being able to hit all of the major points so far because I didn't understand any of it before. I'm not gonna lie.
So I think like the fun of it and the game of it for you would be, projecting out time and price like you're good at, like your pattern recognition and your technical abilities are like really, really adept. So like you should key on that and use that skill to get an edge in the HEX market before the rest of the world figures this out. And like one way you could do that is, when you're doing your projections, you'd say, like, let's just use this one as an example. If we think HEX is going to hit $10.50 by June 3rd of 2025, well, what happens if I stake till June 3rd of 2025 and the price target hits 10.50? And then you could run one of these HEX calculators, which I'll send you the link to. Any information you need. Any information you need, dude, you got me on speed dial. Cool. I want you to learn this stuff. So, what is it? Let's just take a regular $10,000 investment at the lows there. Let's see, what was the lows? 0.004. I'm making an assumption, guys. I don't know if you actually. I think you've said you sniped the lows at 0.004, but let's just make an assumption. Say you bought $10,000 in at that level, and you got, how much HEX would that be at that time? It was like 2 million. So 2.5 million. So you got 2.5 million HEX. Okay, and now what we need to do is, let's say you just wanted to take an all-in bet, and you're running TA on this asset, and you're seeing that EHEX is going to hit $10.30 by June 6th of, how how many days out is that from now? June days until June 3rd, I think it was 2020. Was it 25? I think.
The what?
And to where this fractal peaked.
Oh.
Where's my chart here? This one. This is basically saying if we repeat Hex's fractal, it hits, let's say $10.58 by June 2nd, 2025. Then you could make the assumption like, look, I sniped a $10,000 bag, or I'm willing to risk a $10,000 bag and put it on that date. And assuming that it hits, this is the fun of calculating what the ROI could be. Mm-hmm. So if it's going to be, what was it, $10.58, and I'm trying to figure out how many days until then. Somebody in the chat help me out. How many days until June? 509 days. Okay. So 509 days from now. And we just think it's going to hit that level. Okay, bam. That's what our TA is telling us. Well, now your principal is worth $26.4 million, but your yield, your payout and yield is $3.6 million in yield. So your 2.5 million hex yielded you 342,000 hex. So, but you took that huge risk of, on that run up from 0.4 cents to $10, not being able to sell anywhere along the way, which was Richard Hart's intent, was to get you to lock up and commit and hold for insane gains. Mm-hmm. But like realistically, if you bought the lows with 10 grand, you're not going to put all 10 grand on that date because you don't know if you could be off, left translated, right translated. You don't know exactly all factors, but maybe the way to think about it is just to put 20% of it out there. So you put 500,000 of them, and then the rest of it you can play the cycle with. But then that's still an extra $700,000 of yield that you could get riding that wave up if you're anywhere near those types of levels.
Mm-hmm. Yeah, there's different types of people, obviously, in crypto, right? And some of them are very astute. And they're in the whole trading, and some of this stuff will fall flat on them because they're going to want to go trade tops and bottoms and do all sorts of stuff. But I do think that the general guy off the street, lady off the street, their biggest problem you already have down, which is they don't necessarily trust yet that crypto goes up and to the right over long cycles, right? And so sometimes it's hard to even talk to somebody about, hey, why should you lock up in a ladder? Well, I don't know what the price will be, in 4 years. It might be less than now. And so I think once people have the conviction that they're, they believe that, for instance, Bitcoin goes up into the right. Like, what do I think? Do I think that Bitcoin after it completes another cycle will be less than it is than it was at the bottom? No. Do I think it'll ever get to 3,000 again? No. I have conviction that that'll be the case, right? And so, if you said to me, "Hey, go put your Bitcoin, get some Bitcoin now, put it in here, and I'm going to give you 10 times more if you hold it for 5 years," would I do that? Mm-hmm. Maybe not with everything, but I'd do it. Yeah. I'd probably put something in there because if I could trust that I was actually going to get 10 times more Bitcoin, yeah, I would. Of
course.
Like one of the old famous charts here was looking at HEX versus like ETH and Bitcoin and just seeing how undervalued it is based on ROI from their starts. It's like if this is any promise of what's to come for HEX, blue line is Bitcoin, green line is Ethereum, pink line is HEX. I mean, where you're sniping these lows, I mean, there's so much opportunity on this cycle, as we've pointed out plenty of times, during the stream. And maybe this cycle, the gains are so good just holding the coin that you just don't want to take the risk of staking at all. And that's totally a valid thing too. But I'm just trying to explain to people broadly that the T-share system is made to be there to provide that carrot on a stick that'll act like the mining hash rate. And it's always going to be there for you so that if in any event that HEX creates price floors higher than a penny, whether it's 5 cents, 10 cents, or 20 cents, you're never getting this many units ever again at this price. And you're basically going to have to play the cycle again where you sell the top and try to buy the bottom to get more units. And so you can play that trading game. You can play the staking game. You can set up a ladder where you have some long ones, some medium ones, some short ones. You could do a short rolling stake and then take the yield and punt it for a free hedge. Mm-hmm. There's an infinite number of ways to play it.
Because my thought is I'm going to sell everything at the end of the year 2025, taking profits on all my stuff and getting out, everything. I'm still going to play the 4-year cycles after, but that was kind of my thing, was like, I've got like a 2-year window, basically. That's like the window, but throughout that time I'd be holding it. So it's like, you definitely would want to be able to participate throughout, as long as you're going to be holding it, participate in whatever yield that you could get. But then, like, you know, you could just take the yield that you do get and then actually put that into a long-term stake. And then, you know, if you do believe in it, then you could, you know, still reap those rewards if it does, you know, continue to get long-term adoption 10, 15, 20 plus years down the line. Versus like because my thing is, like, I'm just so short term with these cycles. Like, I am like trading them in and out in the 4-year cycles, and that's the only way I've ever been able, like, how I've made my money in crypto. So I like to play those cycles, and this is one that I think could actually play out in a huge way. It's just that, like, my timeline is so much shorter than the average person when they're talking about this. And like, I obviously see the value in holding a long term, because that's where the most value is created. I just have such a short-term perspective on not only like crypto, but like just the whole entire world kind of at this point. So it's like, for me to trust locking something up, I have like a whole bunch of like, that's just like red flags for me, even though I obviously can see all of the value in it. I'm bearish on the world. That's my problem. So
I'm optimistic.
Right. See, that's really where my thesis comes in, is like, I'm really bearish on the whole world. So it's like, I have a harder time being willing to trust locking anything up, even if it was like Bitcoin.
Yeah. Well, that makes sense. That makes a lot of sense. Mm-hmm. I think you should sell the top and buy the bottom. If you think that, I don't know how you could be bearish on the world but believe in cycles.
Well, that's the thing, is like, there's a shift to all cycles. Bitcoin won't follow 4-year cycles forever. There will be a shift. I hope it's not this cycle. I think it will probably be this next cycle if it's not this one. So that's where it's like, I think there will be a shift coming. And that's where I don't want to be like, I mean, who knows what that even means? Because like, if you're bearish on the world, we have some Great Depression 2.0 again. I'm not really worried about my finances type thing. So it's like, I don't think that there's a wrong way to go about it. Because like, worst case scenario, the dollar collapses. There's no more liquidity. You know, we go through however many years it takes to rebuild that. Like, you're still going to have to go through all of that. It's not going to be easy regardless. So it's like, you might as well have a belief in something and then continue to stick to that. Because if you're wrong about your short-term thesis and it plays out in a much bigger way, you're better off preparing for either scenario. Because like, I don't think there's a way to necessarily be prepared if we had some crazy Great Depression thing over again. Like, it's just going to happen. You're just going to have to live with it after. So it's like, I'm not against, you know, having long-term bets and focusing on the long term and playing the cycle game. It's just like, with where we're at, Bitcoin being 15 years into its cycles, like looking at how long it took the internet to get adopted, 15 years, it's like, I want more than anything for there to continue to be these cycles. But I'm getting to the point where it's like, what more would come? What more can sustain this? Or at least, like, I at least think that we could be due for like, even if it wasn't like a, you know, 3 years down, 1 year up for 10, 15 years or anything crazy like that, where Bitcoin fully goes all the way down. I don't really think that's what's going to happen. More along the lines of like, if we went through like a 10, 15 year type correction, like what the NASDAQ did after the internet bubble, something along the lines of that, like, these type of assets would be better, because you'd be playing the long-term game, and you wouldn't have to worry so much about those. So that's why I do find a lot of benefits in HEX and playing the DeFi game, because we do want to be able to, you know, earn interest off these things. I don't have any doubt that some of these are going to be able to stick around long-term. We all, like, at the end of the day, we don't know which ones those will be. We all have our beliefs in different projects and things. And so I've like tried to factor in all of those different points when it comes for me trying to invest. And it's like, because my perspective was so short-sighted in a lot of this stuff, that it was like hard for me to be willing to want to participate in anything super, super long-term.
I mean, that's the beauty of the contract, though, is it's up to you to decide if you even want to how you participate. It's not like and once you make the stake, you're locked in, but you're in control. And that's like the main thing that you need to remember is with HEX, you're in control. Nobody else is.
Mm-hmm. Well, yeah, a couple comments too. Hey, Joe, Donovan, you're probably pretty normal in your thinking, I think. I don't know. I think a lot of us. Of course, I'm a lot older than you now, and I don't mean to get into age, but I can tell you when I was in my 20s, I was like, "Hey, there'll be time for a lot of stuff later,"
So is
and you know, well,
yeah, I hear that a lot too, um, about about it not making sense to go long on something like that. Like as fast as crypto technology changes, how can you guarantee that Hex will be here in 15 years? That kind of an argument. And I think it's like an all or nothing bet. Like, what difference is it to you to put $500 out 15 years if it could be worth 50,000 or 500,000 in 15 years versus it going to zero? Like, who cares? It's $500, right?
Yeah,
For someone who's already been so successful in crypto, it would be almost irresponsible of you to not actually put a position out there in the event that it is successful, coming off the performance it's had already. It's this like proven track record.
Right. See, and that's the thing. I don't deny that at all. And I do think that, like, obviously the best thing to do would be to, have that long-term projection in place, and just in case you are wrong, because it's better to have, like, plan and prepare for either scenario. So if you are wrong, you can profit either way, because, like, there is that very real scenario. It's like nobody knows what's going to happen in the future. I could be wrong, whoever else could be right.
Mm-hmm.
It doesn't really matter. But if you're prepared for either scenario, I think that that's the best thing to do. And it's like you said, the amount of potential that you could get by participating inside of the ecosystem, specifically participating inside of the yield mechanism, like it's so much that it really would be more irresponsible not to participate to some extent. It's like, I already think that the price is going to do good. So, I do believe that it would be smart to participate in the short term. Then the question comes, well, talking 10, 15-year stakes and things, do you still believe in it enough to do that? And at that point, if you're already going to be playing the short-term stuff and making profit that way, it's like, I still think that you might as well participate in the long-term game too, because it's really the long-term game that's driving all of the short-term momentum in the first place. So it's like
Bitcoin proved that.
Yeah, exactly.
And so, like, I was thinking about that, what you said. I was like, well, what if we do get a .com crash and, like, we get Bitcoin here, top, double top, triple top, max out at 100K, and then it's down, retest 15K, 25, 26, 27, 28, top out at 44K, revisit 15K again. This is the NASDAQ, like you're saying, from .com bubble. And then we're not out above that level until 2033. And then we break out, retest. Bitcoin finally goes on a run. And then by 38, Bitcoin's around $278,000, $280,000. If this dinosaur coin can get to that price by 2038, and you don't think Hex is going to go up 100x by then, you're nuts. Mm-hmm. You know what I'm saying? So even in the most devastating situation where we .com bubble out March of this year, you're crazy not to put $500 out here if you've done well with crypto in the past. Like, this is such an asymmetrical bet. You're betting on Richard Hart taking on the overregulation and winning, and Pulse Chain and Hex becoming front and center of DeFi. That's what you're betting on. So, I mean, I think this would probably be a great place to close out the stream. We're just over 2 hours. I'd love to have you guys both on again sometime soon. We could dive even further into these mechanics. I think I'm an optimist, man. Crypto changed the world forever, and even if we get a 10 years of sideways in crypto, if you play this cycle right, don't stake all your shit out now, right? Don't stake your whole stack out now 15 years. That's probably not advisable. But if you're strategic and you have a good plan, and you take profit at the tops of the cycle, and you're able to capture the lows, even in the event that it's a 10-year downturn, you're going to be positioned better off than the 99% of the people out there. And so I think that's my message to everybody.
Agreed. Well, I appreciate you having me on. It's been a pleasure. I feel like I got the whole gist of everything that needed to be explained, and even more so than I would have thought. So I feel like I got the two best people in the community to be able to explain that. So I really do appreciate it. I had a great time talking with you guys. You got a great channel. You guys both do amazing things inside the community, and I do appreciate that. As I've gotten more involved with it, I found that this community is pretty unique. That was the initial attraction for why I started getting involved. And then I wanted to be able to understand this type of stuff a little bit more, get into the more finer details, and I feel like this stream really helped a lot with being able to explain a lot of those things, being able to actually visualize the long term for the first time. Because I didn't, you see people share stuff, but until you get like every single thing you need to be looking at all right there laid out, that's when it makes the most sense. And you guys pretty much did like years and years of simplifying inside of just this 2 hours. So I do appreciate that a lot, and I can definitely say that I do see the long-term value, whereas I didn't see it. I'd say I didn't see it at all before because I didn't understand anything. Whereas like now I do actually understand why people are so excited about this, why they consider it true DeFi, and more or less why it really is true DeFi in comparison. One of the very first original forms of DeFi in the market too.
Thank you, Crispy, for all your awesome tools. It definitely helps my job get a lot easier.
Thanks. I appreciate the opportunity to sit here with one of my idols, two of my idols. No, I think it's good. Reach out anytime, Donovan. If we can't answer, somebody can answer for sure. But lots of times, I just boil it down to number goes up, and we go from there.
Mm-hmm. Amen. I appreciate that. Same for you guys. Feel free to reach out. I'm sure we'll be collaborating further down the line. I'd definitely like to. I think you guys are great people. So I'm more than happy whenever we want to set up another time and kind of plan ahead for that.
Awesome, dude. I'm not a maxi at all, and you could teach me a lot about the other ecosystems that are growing, because guess what? If HEX does become one of the biggest main units of account, Hexicans are going to be really freaking rich, and they're going to need to be able to divest out into other projects. So we're going to be able to leverage each other's skills for sure for the long term.
Yeah, for sure. Plus all the value happening in Pulse Chain. I don't think people even understand that was really what's like started pulling me over here in a big way. Is like I've already been going cross chain. I've already been making a lot of profit on some of these other ecosystems in layer 2. So it was like seeing Pulse Chain pretty much worth like, fractions versus where I think it will be. I just think that when you're talking about like the total amount of coins and like when you're looking at some of the other projects out there, I just think that there's going to be such a huge influx of value that comes over on Pulse Chain. And it's like kind of one of those narratives that almost nobody is watching at all, but one that I think a lot of people are going to end up following suit with very soon. So it's like, I saw the value in that. And I think that there's only going to continue to be more as more money bridges. We haven't even cracked 100 million yet. So when we're talking about what some of these other bridges are doing, and when ETH kind of sets itself in and a lot of this new money takes off, like I honestly think the amount of upside potential is going to be, life-changing, even if you never even bridge off of Pulse Chain, you just stick around over here. But, we'll definitely be able to share ideas, bounce value and whatnot. So, I'm more than happy to work out how we can.
Hey, you guys, go check out Donovan's channel. I put the YouTube link in there. And anything else you want to say, parting words, either one of you?
That's pretty much it. Thank you guys so much for tuning in.
Go check out hexfire.io. All right. He's the GOAT. All right. Peace.
See ya.